Good morning. On behalf of EMC and the IS team, I would like to welcome you all to the 8th of our installments of webinars for the next from last year to now. So today's webinar will be addressing monetizing the routes for regional natural gas projects. My name is Nick Cobb and I'm the conference program manager for the EMC content program. And it's a great pleasure to welcome all of our attendees here today, as well as our esteemed panel, who I'll introduce in just a moment. The topic that we'll be discussing today is incredibly important, and it's one of those topics that, to be frank, it's key that we discuss this as an individual, standalone, deep dive webinar, in the sense that, you know, if we can't assess the economic routes to market for these great projects that are happening in the Eastern Med, then, you know, it's you know, who knows what will happen. So today we'll be looking at not only project updates and what the region has to offer, but also how we can monetize routes for natural gas to end markets. So we have 4 great speakers today. It's a great pleasure to welcome Peter Stevenson, who's the editor of the MEES. We have Ryan Pereira, Global Director for Gas and LNG at Gaffney Klein. We have Dr. Michael Gardosh of the Natural Resources Administration from the Israeli Energy Ministry. And last but by no means least, we have Andreas Koutsoudis, Acting Commercial Director from the CHC. So we have a stellar lineup today, and in just a moment, I'll hand over to Peter to kick off the proceedings. But at any point today, if you have any questions or queries, you know, please do pop them into the box at the bottom, either as a chat or as a direct Q&A. You can also raise your hand later. If you have any specific questions as to individual presentations, as we're going along, please pop them into the box. We'll endeavour to answer them at that particular point. But thank you very much. And as I say, very much look forward to welcoming you all today, as well as to our main physical event in Nicosia in November, which we will be going ahead with. Now, without much further ado, it's a great pleasure and an honour to introduce Mr. Peter Stevenson. Thank you.
Thank you, Nick. Good morning, everyone. Allow me to also welcome everyone to this EMC online webinar. I'm Peter Stevenson, the East Mediterranean editor at MEES, and I'll be the moderator for today's session, which promises to be extremely informative. The webinar will hopefully provide insight to the dynamics of regional natural gas supply and demand and how this translates into monetization routes for existing and future projects. With EastMed political initiatives fostering regional collaborative efforts, our speakers will be giving their views on the opportunities and challenges for monetization, including infrastructure, investments, and decarbonisation. It's a region where developments come thick and fast, as we saw earlier this week with the groundbreaking agreement between the UAE's Mubadala and Israeli firm Delek Drilling for the latter's 22% stake in the Tamar gas field offshore Israel. So first up, we'll have Ryan Pereira from Gaffney Klein. He's the Global Director Gas and LNG. We've invited Ryan to set the scene with some thoughts today and focus on the wider regional picture in the context of developments in global gas and LNG markets. I'll let Ryan tell you more about how the team at Gaffney Klein recently completed a monetization strategy study for the World Bank, which culminated in the formal setup of the EMGF in Cairo just over a year ago in January 2020. Ryan, it would be great to hear your thoughts on the role of gas in the countries in the region, other than Israel and Cyprus, which will be covered a little more in depth by our other speakers. Ryan will be followed by Mickey Gardosh, Head of Geology and Geophysics at the Natural Resource Administration within Israel's Ministry of Energy, and he'll give us an update on what's happening in Israel and the imminent launch of a bid round there. And the final speaker this morning, Andreas Koutsoudis, the Acting Commercial Director at Cyprus Hydrocarbon Company, CHC, will give us an update on Cyprus and what's happening in the upstream there, including the exploration, appraisal, and development plans over the coming months. Our speakers have approximately 7 to 8 minutes to make their presentations, which should give us ample time at the end for a Q&A session. So please feel free, if you're tuned in today, to post a question below. So without further ado, Ryan, would you like to kick us off?
Hi, thanks, Peter, and good morning, everybody, from as I look out my window, a somewhat sunny London, although we can't promise the same Mediterranean sun that many of you will be experiencing at the moment. And to all those present on the webinar, welcome and thank you for your attendance today. So of course it is a shame that we can't meet face to face as we normally would do, but I hope that you and your families all remain safe in this current time during the challenging circumstances that we face. Thanks again to Peter for the kind introduction, of course to the conference organisers, and especially to the Cyprus Hydrocarbons Company, who it is always a pleasure to collaborate with. So I'll just share some slides, if I may, which will help to bring to light some of the discussion that I'll be using. Okay, just check that can be seen. That's great. So the title of my presentation is really that commercial competitiveness is king and queen. As you will see from Dr. Gardosh later, the technical side is, well and truly wrapped up in the med in terms of people doing a fantastic job. But I think a lot of it comes down to commercial competitiveness now. And as we think about this, the Eastern Med is a region, it's a part of the world which Gaffney Klein have been heavily involved in over the past 20 years or so, and for some time before that as well. And personally, I've been involved with great interest in the unfolding of the gas monetization opportunities in the region. Now, although some observers have maybe say it's a little bit slow, the progress is a little bit slower than they'd like to see, I think this is the reality of energy projects all over the world. For me, therefore, it's very important as an external independent party to reflect on and congratulate those involved in several regional successes. Many of you will be on the conference today. And over the last 10 years, the region has really been transformed on the upstream side by the emergence of the Eastern Mediterranean as a basin with world-class gas potential. On the downstream side, of course, Egypt has achieved major progress with the gasification of the country's largest cities, and of course market linkages with its neighbours such as Israel and Jordan. Not only that, but if you take a look to the northern side of the Mediterranean, Greece and Italy have seen gas become a major fuel source for their economies, supported by transformational changes in the way that European gas markets work. And more recently, Israel has developed some very substantial and low-cost gas, which is bringing down electricity prices in the region. And Cyprus is of course following in its footsteps with both gas development and using gas to power on the island, with Palestine having similar goals as well. So the region is now well and truly on the global gas map, and its longer term potential is starting to be recognised by both regional and global players alike. And projects such as the East Med pipeline and the Eurasia electricity interconnector are attracting interest and funding from governments and private sector alike. In addition to this, a number of the other successes over the past 5 years are substantial volumetric gas finds of substantial good quality and high quality, as Dr. Gardosh and Andreas will speak about shortly. The fast tracking of exploration and development into production, the attraction of foreign investment, and Peter just highlighted a very good example there. And while still challenging due to historical differences, I've noted in the past 3 years in particular that progress has been made to heal historic wounds and build stronger relationships. Efforts to engage in closer and more collaborative discussions on unitization and maritime border disputes, which although often tense, have shown signs of real progress. But of course, these successes are really just the tip of the iceberg. The 10% or so that is seen above water, compared to the 90% of effort that has gone in over the years to support these recent success stories. And I think it's that grey box that's equally as important when people are critical of the region, because I think a lot of this success has been supported by the hard work, persistence, innovation, failures, of course, sacrifices, discipline, of course, criticism that's in there, and the doubts, and of course, the management of risks that have taken place over the past several years. So for me, although I've seen some mixed reviews, a positive culmination of the past few years of effort has been the establishment of the East Med Gas Forum, something which our global gas and LNG team here at Gaffney Klein have had the opportunity to support heavily. And you'll see this picture on the right, which is actually a personal pride for myself and our team, as we presented our study findings and recommendations to the 7 ministers and their respective delegations last year in January 2020. Seems strange that that's already a year ago, just over a year ago. But the context of what I'm here to bring, Andreas will cover Cyprus in a lot of detail, Dr. Gardosh will cover Israel, but I want to bring that wider regional picture and the global picture. Because today's global gas market really is changing more rapidly than at any time in the industry. And there are a number of high-level features that we've been assisting our global clients with that are equally as important to today's discussion regarding the East Med region. Gas is taking an increasing position as an advantaged, if you want, fuel against oil, not just in terms of environmental benefits, but also in terms of cost. The emergence of the US as a major LNG exporter has changed the market fundamentally, and there is now sufficient gas flow between major markets, wherever in the world you are, to create price linkages that are going to present a major competitive threat, of course, to longer term gas exports from the Eastern Med. So that's something to keep an eye on. The effect of this is that it's even more important than ever that the development costs of gas in the region must be kept at similar levels, really similar to the lowest cost gas being produced today. So that's a bit of a reality check for the region. And to that extent, I think collaboration amongst the EMGF members can, if harnessed correctly, really strengthen the collective position of you as a whole. Also, changes in gas market regulation and market reforms around the world, they're really providing supportive mechanisms to ensure more competitive and more efficient gas markets, moving away from costly and inefficient subsidy programs. And a couple of other trends as well, that new technologies and trends such as consideration of hydrogen across Europe and the world, and gas's role more generally alongside renewables are becoming increasingly important as we all strive towards achieving a very challenging energy transition. So I'd like to repeat here that for me, we're not really in a race to renewables, but we're actually in a race to decarbonize global energy chains, and gas has a key role to play in that mission. What is clear, therefore, is that we are all operating in an increasingly interlinked global gas market. And when looking at regional gas monetization and utilization options, we cannot just look at the region in isolation, but we must be fully abreast of the global market conditions, both short and in the longer term. So let's just briefly have a look at what's been happening at the start of 2021 and in the recent history in terms of global gas markets. I won't spend too long on this slide because many of you will be familiar with these developments. But what we do see on the supply side is we had a real tail off in terms of final investment decisions over the period of 2017, 2018. And that really bounced back in 2019 with a record year for FIDs of LNG export projects. Now, of course, 2020 then saw a very low year for FIDs with very minimal investments actually being approved. But 2021 has already started a bit more positively with Qatar. But I'm somewhat cautious over the next wave or the second wave of LNG projects, whether that's in Africa with Mozambique, if you look at the force majeure just declared this week by Total on that project, which was going full steam ahead, and also some of the US LNG projects, which are being delayed, and I think many of them will also be cancelled. Against that, there's also a demand recovery. So I think 2020 was really a blip, largely driven by COVID, but I see a strong recovery towards the back end of 2021 and 2022, largely returning to pre-pandemic levels. China and India will be key, as well as the emerging economies in Southeast Asia. And the impact on pricing, because that really comes back to the initial discussion around commercial competitiveness. Where will prices settle? Well, they've been all over the place. We had a halving between 2018 and 2019, a halving again in the first half of 2020. And then it reached record lows to sub $2 per MMBTU. At the start of this year, of course, we all saw the spike reaching $2 per MMBTU delivered towards Asia due to supply outages and also demand spikes. So that has implications for the gas importers and LNG importers in the region, because although 2020, a lot of our clients on the buyer side were actually thinking, well, we could just go to the spot market. Why do we need long-term contracts? That picture has drastically changed and made them relook at their LNG procurement decisions. And we see several other trends. I'm sure this will come up in the Q&A and the discussion around FSRU contracting, and also the real increasing importance of carbon neutrality and decarbonisation of the gas value chain. But what's key to me as we bring this global picture in is that it's increasingly important for what I term as smaller players, but by no means small markets, gas markets, such as those that you have here in the Eastern Med, from demand pockets as well, both in terms of sellers as well as buyers, I think you have a really key role to play. So now let's perhaps zoom back into the region, going through this quite rapidly at the moment, and look at the supply demand story. So some of the numbers that we've worked on are obviously quite sensitive, but I wanted to paint at least some picture using a couple of scenarios to give you some sense of where I see the region potentially going moving forward. Historically, you'll all be familiar that the 7 member countries of the EMGF have been significant net importers of gas due to domestic and regional supply falling short of demand. This trend, of course, could be said to carry on to the next decade, but interestingly, if we separate Italy and Greece from the consolidated numbers, we see scenarios whereby there are surpluses available for export for much of the next decade. Current projections provide potential for more than 13 BCF per day supply peaks by 2028, but a rapid decline to 8 BCF per day by 2040 without new exploration and development. But of course, over the period 2023 to 2030 and 2030 to 2040, there are several monetization options which I mentioned on this chart, and many of which will be discussed by Andreas and Dr. Godash, so I won't speak about those too much here. But what I would say is that this all lines up against quite a substantial increase, 30 to 40% increase in demand from today's levels, which could reach some 16 to 18 BCF per day by 2030 and 18 to 20 BCF per day by 2040. The low ranges that I just mentioned actually indicate the potential impact from a higher and faster renewables penetration displacing gas in the energy mix. And many of you will know that the region has aspirations to become a net gas exporter. However, for longer term sustainable exports to be sustained, I think significant additional volumes of this low cost gas are actually needed over and above what is known about today. So we can see that there is opportunity, as is the focus of this webinar, of the region moving from a net importer to a regionally balanced model, thereon to an export-led model. But I think to go with that, the de-risking of export infrastructure, such as the EastMed pipeline, will be essential to overcome some of the technical and commercial challenges. Clearly, as I stated up front, it's the commercial competitiveness. I cannot highlight or reiterate that enough. That will be key. It will be king and queen, both in terms of pricing and break-even costs for both import or export-led monetization options. So it very quickly becomes apparent as you move from the left-hand side across to the right-hand side that this transition really sets out quite demanding criteria. And given other well-organized and low-cost competitive gas sources that I've mentioned from other parts of the world, the one ingredient that's really key and essential to achieve this regional gas monetization goals will be the added strength that comes with collaboration in the region. So just moving and pausing now, where does this actually leave us today as we set up for the talks from Dr. Godash and Andreas in terms of conclusions? I just wanted to bring our global insights because I won't go through these in turn, but working with various of our clients globally, we see that today's gas market is governed by various trade-offs between various parties. And these are also negotiation levers as well that need to be taken into account, as I have highlighted on the left-hand side radial diagram. Hopefully my presentation today would have provoked some thought for you, and this may come up in the Q&A as well, as to what I feel are the key strategic considerations facing the region, and these are recapped in the middle diagram, and some of which I've touched upon today. But finally, I want to conclude again with a reminder about commercial competitiveness, and what I see as 4 key pillars to really drive the regional collaboration in the area, which will provide extensive support to efforts to secure and enhance the value of regional gas resources. So the first one is that cooperation, as you all know, is essential to establish more confidence in the gas resource potential of the basin through coordinated exploration rounds and greater consistency in the regulatory process. Secondly, regional synergies and cost synergies through that regional cooperation will be needed to keep wellhead break-evens in a range where the gas can compete internationally. And we have got a lot of detail on those numbers, but obviously a lot of those numbers are quite commercially sensitive. And thirdly, fully utilising the infrastructure that both already exists in the EMGF member countries, that will be key to this next phase of development, ensuring that the gas has the biggest economic contribution for member countries. And finally, in the medium to longer term, as the region moves towards a more commercially orientated market structure, it will be important to ensure consistency in regulation and the approach to the creation of a gas hub. And all of these 4 pillars are really things that the EMGF are looking to support going forward. So there are several paths on which the EMGF and its member countries and the observer countries can capture opportunities to really maximise the monetisation value of the region's gas and address many of the risks that are present today. The years ahead are of course challenging, but they will be exciting, I believe. And with that, I'll now pass back to Peter, and I look forward to learning more from Dr. Gardash and Andreas. Thank you very much for your attention.
Thank you, Ryan. Very informative and really sets the scene for our other speakers to give a little bit more detail on each of the countries that they're going to cover. So without further delay, if Dr. Mickey Gardosh is with us, maybe you can take us into what's being planned in Israel and the latest developments. Dr. Gardosh, the floor is yours.
Hello, everyone. I hope you can see my presentation. Just Peter, can you reassure that, just to make sure that it can be seen?
Yes, yes.
Okay, wonderful, lovely. Okay, so I'd like to take you through some of the developments in our region. As you know, we are going through, I would say, some sort of a gas revolution, where in the past 20 years we have been continuously developing our offshore resources. And I'm sure many of you heard about the major discoveries that we had since the 2000s with Leviathan and Tamar. There's jewels in the crown. Our gas reserves are currently around 800 BCMs, both in 2P and 2C categories. I think we produced so far about 50 since the start of the Tamar production. Tamar field is operational since 2013 and Leviathan since 2019. Karish is the newest development. It's, as you know, or maybe you don't know, it's being will be operated by an FPSO. And actually, I'm sitting now in the onshore facility of the Karish operation, where we have a visit today. It's been delayed a bit because of COVID-19 issues and the construction of the FPSO in Singapore, but hopefully we will see it in early next year. Another major development from our side is obviously the purchase of the Noble Energy asset by Chevron Corporation, which is a big step for us, having one of the largest oil and gas companies in the world involved in our area. Definitely will boost activity in coming years. Gas production in 2020, we totaled production of 15.5 BCMs, more or less evenly divided between Tamar and Leviathan. Domestic market consumed about 11 BCMs and about 4 was exported. Royalties reached a record high of around $300 million from this gas. Obviously, there are taxes and other types of government takes, but royalty alone is already a very significant amount. We see the main area of growth in our domestic market. As you can see from this graph, it's already a few years old, but still I think it gives end with a very high growth rate, among the highest in the world. 22 plants were connected to the gas system in last year. We're aiming at 85% of electricity being generated from gas, hopefully reaching it into 2025, where we'll be getting rid of all our coal units. So overall, gas demand is increasing, and it will be increasing, hopefully continuously, although I need to make a disclaimer here. We just about to review our green policies. You know, that's a global situation where all governments are reviewing their policies regarding renewables, and our energy mix will likely be changed, but not in the near future. Probably will take 10-20 years to have any significant effect on our export. Significant contracts with Jordan and Egypt, 48 BCMs in 2 contracts for the Jordanians, mostly for the Jordanians electric company. Egyptian companies also committed to 85 BCMs in the next 20 years. Also, we've seen a very encouraging sign where the 2 ministers of Egypt and Israel recently met and declared that they will be promoting the connection of our fields to the LNG facilities in the Egyptian Nile. You see this in my map here. Hopefully that will come up in the next few years. And also the East Med is there. It's going on. Last year, the end of last year, we've seen some efforts in the planning and geophysical surveying and geotechnical surveys of the route of the East Med route in the Israeli water being conducted, and that will take place probably throughout the route of the pipeline. So as far as we're concerned, this is still a very viable project, and we will follow up events and see how that hopefully will materialize. Going into my favorite subject, geology and geophysics. This is my expertise, and I can tell you that from my analysis and our team's analysis, we have various potential plays that are still not well tested. At least 4 plays we can identify for both gas and oil. The famous one is the oligomycin sands, the Tamar sands, which is producing from Leviathan and other wells, other fields. And this play is not well tested in the southern part of our water, and we think there's still significant reservoirs to be found with this gas. There's the shallower gas, also the Afro gas that was discovered in Mary B, and also possibly late Miocene, mid to late Miocene sands on top of or shallower than the Tamar sands, which are not sufficiently well tested and have some more potential. And then there is the oil play, which we strongly believe is there. We have all the indications from our studies and our analysis. Oil is likely to be found in Jurassic and Cretaceous levels. It was found already in the past in some of the wells, and we definitely see a possibility for oil discoveries in any of the major structures that are there in a lower depth, in a deeper layers of Mesozoic age, probably in a greater depth of 6, 7, and 8 kilometers. So having that in mind, and really having the ministry's interest to promote exploration, we are going to issue a 4th bid round for the offshore assets. We already have done a few. We've done 1st and 2nd, which was successful. We're looking forward to issue more licenses. We actually are going to offer 4 zones, 6 major zones. You can see them in my map. Some of them in the north, some of them in the west and in the south throughout the area. Zone E, B, G, H, F, and I. These are including attractive targets in the proximity of some of the existing discoveries. And I can just briefly discuss some of examples of the targets that we see. For example, here, what we call the Sara Deep Lead, it's in Zone B, and you can see this nice big structure below the sour well, in greater depth in the sour well, with strong amplitude anomaly, possibly in an oligomycin level, and there's most likely also a deeper potential for oil in all the strata. This was estimated previously by NSAI to contain nearly 1 TCF of gas. So this is like one of the examples. There's another one in Zone E. Here we're focusing more on Miocene or later younger age stacked fans and channel deposits. You can see them here. They are marked here below the Messinian salt, the yellowish colors, and you can see they're all associated with nice amplitude anomalies. This is something we'll be happy to test. And here is another one again, somewhat shallower levels of Miocene age, a combined structural stratigraphic trap, again, possibly similar to the Tamar Sen type turbidites, and you can see this structure, nice structure here. This is in G, sorry, it's called the Roe lead, and you can see again some nice amplitude anomaly. So we are currently now in the process of developing those potential leads. We will have many more of them. I can already tell you there's very interesting targets in zone G and H. They were not explored before, and we're looking forward to see some activity there. Just a bit about our bid terms. We run our licenses in a tax royalty physical regime. We're going to have 6 multi-block licenses up to 2,000 or thereabout square kilometers. We will grant for each of them a period of up to 7 years, divided to milestone 3, and then 2 years to drill, and then another 2 years to develop another or appraise another area in the block or in the zones. So our bidding criteria would be mostly focused around the work program, but we will definitely include also some component of signature bonus. And we will, as we do usually, and if we did in the past, we'll provide an extensive package of 2D and 3D data and well data that will be available for the bidders. So, you know, we're looking forward to see strong participation. If I haven't mentioned, we probably will issue that in the coming months, maybe the mid to late May. Haven't been finalized yet, and the bid will be on for about 6 to 8 months, probably till late to 2021. So if there are interested parties, you're welcome to contact me or check our website, and we'll be happy to see you. And with that, I will finish my presentation. Thank you for listening.
Thank you, Dr. Gardosh. Again, very informative and a nice little insight into what's happening in Israel and what's going to happen, hopefully, with the new bid round. So we'll move swiftly along. Time is of the essence. And next up, we have Andreas Koutsoulidis from CHC, who's going to give us a taste of Cyprus and what's happening here. And yeah, Andreas, if you'd like to go ahead. Thank you.
Yeah, thank you, Peter, and I would like to also thank the organizers for this great opportunity to talk about the region, but also the opportunity for the Cyprus Hydrocarbons company to talk about what's happening here and how we see the challenges and the opportunities and the way forward in the country and the region. Also very excited to see many participants locally, also from the region and globally, and excited that we have the opportunity to meet even virtually during these unprecedented times. In my presentation and following the great presentations of presentations from Ryan and Dr. Gardosh, I would like to focus on what's happening in Cyprus, but also globally. And I think that one can't talk about the energy industry today without taking into consideration and taking the perspective of the energy transition that is much talked about, and also lots of actions taken by governments and international oil companies around the world. The topic of energy transition is something that as a country, but also as a company, we're taking very seriously, and we are analyzing all the time. And what we see is that this transition will take time, primarily because of issues around energy security and ensuring the energy security during this transition period, but also the nature of the infrastructure and investments that need to take place to support this journey. I'm pretty sure that all of you have seen many presentations and views around how this energy transition will look like. Purposefully, we have decided to put here an example from the BP's energy outlook, with BP being one of the companies that are more aggressive, if you like, or more optimistic around the energy transition. And in particular, we picked the rapid transition scenario, which is again the most optimistic of all in terms of the transition. And what we see here is that it is projected that gas demand will remain strong even in the rapid energy transition scenario, and it will even increase over the next 15 years. And this really demonstrates the resilience of gas when compared to oil and coal, which, as you can see on the graph on the top right-hand corner, coal and oil are expected to decline. Looking at gas and drilling into one step into the detail, we can see that this demand is primarily coming from LNG, and primarily driven by the Asian markets, being China and India at the moment are one of the many countries that are looking to import more and more LNG to meet their domestic demands. And with that, I move to the Cypriot EZ, kind of taking a snapshot of how the activity looks today. We have 9 blocks that are awarded to various companies and consortiums. There are 8 exploration licenses that are live. And so far, in our short journey in the oil and gas industry, there were 8 wells drilled by the contractors of the Cypriot government, which have resulted in 3 discoveries. The first one is the Aphrodite field. Then there was the Calypso discovery, and also the most recent of the 3 being the Glafkos discovery in Block 10. When it comes to Aphrodite, our first discovery and the most mature, if you like, from a time point of view, there is an exploitation license that is issued to the consortium of Block 12 partners to proceed with the exploitation of the field, and there is an agreed plan of the way forward to FID and to first gas. what to expect in by the end of this year in terms of upstream activity is that there are going to be wells that are going to be drilled in Cypriot EZ this year by the end of the year, and this will be done by ExxonMobil and Qatar Petroleum, as well as Eni and Total. Going into Aphrodite in particular, one can't talk about Aphrodite without kind of placing a reality check, if you like, or the challenges that such a field has to face, and really some of the challenges, and very consistent with the messages that Ryan Pereira from Gaffney Klein and Associates has highlighted a couple of minutes earlier, is the fact that we are living in a low price environment, and gas resources need to be competitive in the global scale, and that's very relevant for Aphrodite as well, and it's even more important because the size of the domestic demand in Cyprus is much smaller than the production capability of Aphrodite. So immediately from day one, you're looking at export markets. And the second point is the fact that Aphrodite being the first upstream oil and gas development means that the field is relatively isolated from infrastructure, at least locally. And therefore, we from day one we had to start looking at export markets, and following lots of market analysis and also discussions with stakeholders, we have landed and agreed that the destination or the monetization route of Aphrodite is going to be Egypt. The reason for that is really the favorable framework, first of all, from a supply and demand point of view. Egypt is a huge consumer of gas as well as a producer, but the long-term fundamentals show that potentially they will need additional gas resources in order to meet their domestic needs and ensure the supply security of their domestic market. On top of that, the availability of export infrastructure, namely the two liquefaction plants in Itku and Damietta, provide the tools, if you like, to export gas from Egypt to the world through those facilities, and also helping Egypt at the same time to become a partner and to play a role in this energy hub. Egypt is also taking very solid steps in terms of liberalization of their gas market, which is really required for any commercial decisions to be taken for the upstream. Even with the things that we talked about, the solution for Aphrodite needs to be constantly reviewed and optimized in order to ensure the competitiveness of the cost of the field, And this optimization can take place through synergies across the value chain, be it in the upstream or the midstream, but also a robust technical solution, which will ensure that the technical solution adopted is the most optimal solution based on the technology available at the time. And I would like to focus on the synergies. I totally agree with Ryan that synergies are really needed for the monetization of these resources. All the countries in the region need to work together. And I would like to outline what the countries in the region have done so far, how they are preparing for the future, and also what opportunities are going to be present in the very long term. Starting from steps that were already taken, Cyprus and Egypt have signed an intergovernmental agreement specific for the Aphrodite field and the transportation of gas from Aphrodite in the Cypriot to Egypt. And this is a very solid step which sets the framework for the commercial agreements that are going to follow. We are also very excited and happy to see Israel and Egypt strengthening and improving their relations to a stage where there is gas flowing at the moment from Israel to Egypt. This is not talk. This is real gas that is flowing from one country to the other. But all these are not enough, and the governments and the countries recognize that, and this is exactly why they formed the Eastern Mediterranean Gas Forum, which has one of its objectives to have a coordinated approach in policy making, and as part of that. There was the Gas Industry Advisory Committee that was formed and is currently active with separate subcommittees on technical, economic, and regulatory aspects, advising the Eastern Mediterranean Gas Forum and the countries that participate in it on steps that need to be taken from a technical, economic, and regulatory point of view to encourage investment and to overcome obstacles in order to make the gas flow. Cyprus is an active participant in the Eastern Mediterranean Gas Forum, but it also participates and contributes through CHC and through DEFA in the technical, economic, and regulatory subcommittees of GIEC. Looking now into more of the long term, and if you look at the small map on the right hand side of on the bottom right hand side of this slide, you can see that discoveries in the waters in our region sometimes are in close proximity to each other, or in relatively close proximity, and with more exploration coming in, there will be more and more opportunities for collaboration. On top of the distance between the fields, in certain occasions we have common characteristics in terms of their water depths, the reservoir type, as well as gas composition. And these are really characteristics that potentially can enable the joint developments or some kind of collaboration between upstream partners and also between countries. And I'm just to kind of conclude this slide, I'm very confident that all the steps for regional collaboration are taking place. We see already some results of that, but also we see the fact that the governments and the countries are preparing and planning for the future. This is my final and concluding slide. I would like to reiterate the point that the outlook for natural gas is that demand will remain strong. Gas is the transition fuel for this energy transition towards carbon neutrality. Cyprus is a frontier exploration area. It's an area that is underdeveloped and is focused on gas. So it's the activities that we're doing in Cyprus are pretty much in line with the efforts and initiative globally on decarbonization. And there is exploration, appraisal, and exploitation activities that are ongoing in Cyprus. And as I said before, there is a plan agreed for Aphrodite, and there are wells that are going to be drilled by the end of this year. Kind of repeating again Ryan's points and points I raised before around synergies. It is challenging to develop isolated deep water gas fields, and this is why we need to add value to our monetization plans through synergies. And again, I'm very happy that solid steps are taken for regional collaboration, which are really the ones that are needed to enable the development of a sustainable, a long-term sustainable gas hub in the region, which will ensure the supply security of each country of the region, but also will enable the export of gas from the region to Europe and to other parts of the world. And with that, I will pass it on to Nick to take questions, and I'm happy to take any questions you may have.
Wonderful. Andreas, thank you so much. You know, I think what we've seen there, 3 wonderful presentations, really insightful, a huge amount of detail, and there's a lot to take in. But I think what we're seeing there are some truly very interesting, sustainable and long-term developments that absolutely tie into, you know, that cleaner transition, that transition towards a cleaner energy mix. So we have a few questions coming in. I'd like to encourage everybody that has a question to pop it into the Q&A box or the chat box, and I'll go through them all. We've got a few in already. But thank you personally from myself to all of our great speakers. And I believe, Peter, you have a couple of questions for the panelists to kick off.
That's right. Allow me to make a start and maybe get the ball rolling here with a relatively easy question for the guys. And I'd just like their viewpoint from their own vantage point. Andreas from Cyprus's point of view, Dr. Gardosh from Israel, and Ryan possibly as a more broader regional opinion, that how much of a game changer in the region has Chevron's entry been, especially for Cyprus entering a project that is on the way towards development, hopefully for Cyprus, entering Leviathan and Tamar, Leviathan, which has prospective development phases that could be coming up, and then on a wider view, as Chevron has also entered Egypt, you know, how all that could help synergies and provide the region with greater opportunity to develop its gas assets. So if you don't mind, we'll go in reverse order this time. So if we go Andreas, then Dr. Gardosh, and then Ryan, if you'd like to give us your own view on that question. Andreas?
If Dr. Gardosh wants to go first.
Well, you know, I assume Chevron, like any major company, a big company, it's like a big, you know, airplane carrier. You know, it starts to move slow, but then it picks up, and then it goes into full action. You know, to be honest, we haven't seen yet a major change on the ground. You know, the same assets are being developed, but the fact that Chevron is there is I think signals that they have an interest in the area, and they see a potential, and they are the kind of company that can bring something like the East Med pipeline alive if they see you know, the numbers meet. See them as a kind of a company that can do these synergies that we were talking about, and can promote big projects like East Med and other big pipelines. And we are, you know, we're hoping to see that in the future.
Yeah,
that's my take on Chevron. Yeah.
Yeah, I wanted Dr. Gardosh to go first because Noble and Chevron are currently producing in Israel at the moment, and I think it's important to start with them and hear from them. From our point of view, we see that Chevron as a major player is adding technical, commercial, as well as financial capability to the existing Block 12 partners. We are very excited to see the merger, and they are also very serious about the region. Chevron acquired Noble globally, but their East Med portfolio was part of the rationale, if not one of the key reasons why they acquired Noble. The combination of Noble and Chevron in the region leaves them with positions in Cyprus and in Israel and in Egypt. And I think this can facilitate the faster progression of projects in the region. And also, we shouldn't underestimate the fact that these kind of transitions sometimes can make you slower before they can make you faster. So we're looking into the future. And we are very optimistic that things are going to go faster in the long term, but it did take some time for the transition to take place and for the organization to come in.
Yeah, thanks, Pete. So I'll just wrap up with that because I think, you know, both Dr. Gardosh and Andreas have made points that I fully agree with. And having started my working career with a major, I think one of the phrases that I often think about is that change happens slowly until it happens quickly. And I think that will categorize a lot of the involvement of these major players in the region. But I think it's a very positive sign, the fact that these large players, you know, with established gas and LNG and infrastructure know-how are actually investing in the region, from an exploration, from an appraisal and the development and the producing area as well, whether that's in Israel, Cyprus, Egypt, and the wider region in North Africa as well. I think it will come back to commercial competitiveness, because if you look at any of these companies, as with other operators, independents, these positions and licenses are, of course, just one part of a much broader portfolio of which they'll have to address wider competitiveness in the region. And I think that links closely as well, Peter. You've flagged a question to me about Block 9 in Lebanon, and whether the question was about the opportunities for monetization of that. I think, of course, there are a number of, as I highlighted in my presentation, a number of maritime disputes, a number of unitization issues that need to be discussed and resolved and are being worked on. Of course, it's been long-standing issues for some of these areas. But again, Block 9 in itself, Total will see that as one position in their portfolio, which they'll need to address against other positions in their portfolio, not just globally, but of course the positions that they hold and are actively pursuing in the Eastern Med. So I think all of these have a role to play, but ultimately it will come down to that commercial competitiveness. And as Dr. Gardosh actually highlighted, things like the East Med pipeline, which having looked at the economics behind that are extremely challenging. But I think if enough opportunities are brought together, they could be made to work in the longer term.
Thank you. Now, I have a number of questions that have come in. We have a good number. I'm just very conscious of the time. I would like to try and answer all the questions if we can. So if I could possibly encourage the panelists to keep the answers as concise as possible, and we can quick fire through some of the questions so we can make sure everybody has a chance. So Ryan, there was a question from Nicholas Juliotis from CHC. He said that you would be able to answer his question. And that was in relation to energy transition and decarbonisation.
Sure, yeah, thanks Nick, and thanks to Nicholas for the question. I'll keep the answer very brief. I think that, so the question for those of you who haven't seen it is whether the energy transition and decarbonisation of hydrocarbon developments are considered opportunities for further developments for the East Med gas producers or a threat. Personally, I think that they're only a threat if we're blind to the opportunities that they present. And I think the opportunities are several. And I think that, this is really where the opportunity for the East Med Gas Forum members is to work together and collaborate on providing solutions to reduce the carbon intensity of the gas that's produced in the region. And I know already that, under the EMGF, there's the GIAC, which Andreas mentioned, the Gas Industry Advisory Committee, and there are technical and commercial subcommittees which are looking at this. But just to give you some context, I mean, we were looking at it very briefly as we look at many things in our carbon management practice. And if you can achieve a 10 cents per MMBTU saving or a competitive advantage on decarbonised gas in the region, that could equate to some $3 billion of NPV being added to your bottom line. So I think that gives you an opportunity, the size of the commercial opportunity that's out there.
Thank you very much. We have a second question here, which I believe may have been answered. This is from Kevin Fuller. Peter, did you see this question? This would be possibly relevant for Andreas.
I believe Andreas answered the question. He said, do you expect new wells to be drilled offshore Cyprus this year or pushed back into 2022? Andreas, you mentioned that Exxon will be drilling at the end of this year and possibly also Total and Eni. That's correct?
Yeah, I think, that's correct. I think the question came before I covered that slide.
Yeah.
Okay, great. So Peter, we have a next question coming up. This is for all the panelists. What are the panel's expectations for Block 9 Lebanon, which is to be drilled in 2022?
Well, I think Ryan tried to cover that in his previous little answer. I don't know if Andreas or Dr. Gardosh have anything to add to that. Guys, would you like to?
Well, there are currently discussions between the Israeli and Lebanese authorities regarding the delineation of the borderline. I'm not sure how the companies are sensitive to that. Total and Eni are taking that into consideration, and they may not do anything significant before this thing is being resolved. On the other end, they may decide to drill. In the northern part of the block, I can only say that previous well in Lebanon, in Block 4, I believe, was a dry well. I tend to think, from the geological point of view, that this will, Block 9, as it is closer to our area and potentially to the source of the sands, of the Tamar sands, may have better chances. But still, I cannot, we still need to see some well drilled in this region. So far, no gas and no sand was found in the wells drilled in Lebanon.
Thanks. Thank you, Jens. Okay, Peter, next question up we have is from Dimitris Lemos, and it's regarding, are there any plans for carbon capture projects in Cyprus or Israel?
Yeah, sure. So we'll go to Andres. Would you like to field that one? And then maybe move to Dr. Gardosh.
We are looking into the technologies of carbon capture and storage, but I don't think at the moment we can say that we have plans to execute such a concept at the moment. So if the question is whether there is an immediate opportunity now, then the answer is no. But it's something that we're looking into for the long term, and happy to discuss this offline.
Well, we have been looking at it for already quite a long time. We've done some studies back about 5-6 years ago for some initial feasibility studies for storage of carbon storage in the Negev, in some big structures that we have there. It's also an issue that is very much discussed in our energy policy discussions for the 2050s. But I cannot say any actual steps were taken. One of the major discussions is whether we should tax, should put some taxes on that will require the electric companies to store CO2 in the ground or not. I would say in the coming year we'll probably see more advance in that area, but so far nothing concrete. Although it's well in our discussion and our policies, forming a groups the issue of storage.
Yeah, and just to add to that, I mean, it's something that our clients globally, we've been helping them with an increasing amount in the past 2 years, and everybody's looking at it because they have to, and secondly because they're trying to figure out how to make the economics more competitive. But what I would say is that although CCUS sometimes get a bit of a bad rap if you look at where it is at the moment in terms of challenging economics, I think there are other solutions along the value chain which generate a very quick payback and a high return on investment in a very short period of time for very little capex as well. So I think, Israel, Cyprus are clearly looking at it, and I know that discussions within the EMGF are clearly also focused on decarbonisation of energy chains.
Thank you very much, guys. Okay, we have a question here from Miriam Zwingli. Would sustainable infrastructure road construction made in Germany be of interest to the panelists?
Yeah, I'm not quite sure who the question is aimed at exactly, but Ryan, would you, as a
so I get anything non-Israel or Cyprus. So yeah, I mean, I'm not sure exactly, sorry, Zwingli, what the question's targeting, but I mean, I would link it actually. It links quite nicely into new opportunities. So one other question that's been raised is about Cypriot gas demand and the growth of that. That's something that we've looked at in the past. But one of the opportunities actually talking about road construction is around the use of gas as a transport fuel. And of course, that's been looked at in Egypt. It's been looked at, I know, in Cyprus, and it's been looked at elsewhere in the region. And, Germany's perhaps a good example, as is, say, the Netherlands and other areas which are actually looking at importation of LNG and actually have got facilities to import LNG. and to transport that via rail and also via road as well. So I think, if that's what the question related to, then I think that that's an opportunity to look at elsewhere in Europe and consider what the merits are for transportation of gas by LNG or CNG by road are within the region.
Would the other two speakers like to take a crack at it, or should we move on to the next question?
Oh, I think I'm covered with what Ryan mentioned. Now, if this question is, and I think the original question was focused more on the long term of Cyprus, I would just like to add the fact that the gas consumption in Cyprus at the moment is zero, but and is expected gas is expected to be injected into the system very soon. And over the next few years, we will see a significant increase of gas use in Cyprus. The final impact of that will also really depend on the impact that the introduction of gas will have to the industry in Cyprus. The industry in Cyprus is pretty much underdeveloped, and we believe that the introduction of natural gas will enable companies to increase their industrial activity in Cyprus, and that's a big question and a big consideration to take in mind when thinking about the gas demand in Cyprus in the very long term.
Thank you. Okay, so we have three final questions now, and two of our kind question, I don't know the right term to use, donators, Paul Mason and Michael Schwartz will select, if it's okay, one of those questions for the benefit of time. So Paul, thank you very much indeed for your question here. Where will the hub for technical development and engineering be for the region? Will it be Israel or several regional countries?
If Dr. Gardosh, you'd like to take.
Can you repeat the question? I don't see it in the.
So where will the hub for technical development and engineering be for the region? Will it be Israel or several regional countries?
The concept of a hub is not really well defined for me. I mean, I know we have a lot of activities in both countries. There's definitely going to be a cooperation, and we see cooperation, and we see gas moving from Israel to Egypt. So each country will still develop its own resources. So I don't see
Okay, there are some technical problems. Dr. Gardosh, can you hear us?
Yeah.
I'll just pick up briefly on that. I mean, because I think that what you will have to see is you'd have to see individual expertise, whether it's technical or commercial, within each of the countries. But one of the really, again, positive and encouraging signs is that under the EMGF and under the GIAC and the technical committees is we're seeing this collaboration and sharing of experiences and knowledge amongst regions. So I think, in answer to the question, as I think Dr. Gardosh is back now, we can wrap up. But I think you need expertise in individual countries, but also you'll need that regional collaboration, as Andreas mentioned as well.
Yeah, and go ahead, Dr. Gardosh.
No, just go ahead.
The concept of the hub from a technical or logistics point of view, if you like, is that there is no one particular country that is going to be the technical or logistics hub. I think they will all contribute to one hub, which is the region, and we already see signs and actions of collaboration and use of facility by one country from another. For example, we know that there were certain logistics services provided using Cypriot ports and companies for operations in Israel, and vice versa. When we will have more activity here in Cyprus, I do expect that there is going to be facilities and services used from other countries such as Israel and Egypt.
Just one point that I'm thinking of. You know, we see the East Med pipeline plans, and it appears that the plan is to start it somewhere offshore Israel in the vicinity of the Leviathan, facilities. So from that respect, you can say that that area will probably attract gas coming possibly even from Egypt, but maybe from other countries as well. But that's where it will start. So in that respect, you can say that that may be some sort of a hub.
Just one other comment I'd add very briefly, if I may, on that is other technical and commercial joint efforts. So we were looking at some numbers last year regarding FSRUs. You know, if you look at the region in terms of FSRUs, now you've got Jordan, Egypt have had experience, Israel, Italy, of course, and soon to be Cyprus, and of course you're experiencing Greece. And then broader than that, if you even take it beyond the region, you've got, you know, Turkey, Lebanon, Libya, and activities elsewhere in North Africa. So what we were looking at is a way just amongst those 7 member countries to share and collaborate on FSRU efficiencies, as we term them. And we did some rough numbers on that, and we saw that there could be a potential of $1 billion of NPV efficiencies to be realized over the next 3 to 5 years or so, if the region can come together. So just want to throw that out as another number of real significant dollars that can be added to each of the countries.
Thank you. Peter, I think let's go with Michael next. This seems to be for Andreas. It was the first question from 956. It was about Cypriot gas demand.
Yeah, so I think it's picking up on what Andreas kind of already mentioned a little bit earlier. I mean, where do you see gas demand going and moving forward to 2040, Andreas? Do you want to give a little bit more on that?
No, I think we covered that question already. Just to kind of recap on what I said on that point is that gas is being introduced at the moment. So in the short, medium term, we will experience a huge increase in demand naturally, because demand is zero now at the moment. But when looking into the very long term, I think we will need to wait to see what the impact of the industry of the industrial customers is going to be, because these are the ones that can add significantly to the existing demand, which is around 1 BCM.
Okay. No worries. Okay, so Michael has very helpfully just pointed here that the first question was given before Andreas gave his view. That's fine. So in which case, then let's quick fire go over to the second question from Michael, if that's okay. If we have time, Peter.
Sure. I would just like to maybe quickly answer Johannes's question very quickly.
Yeah, please do. Yeah.
So if Dr. Gardosh, could you give us an update on what's happening in Israel's third bid round for Block 72, or is that pending?
You know, it's pending. It was challenged in court, so I cannot expand on that, but we hope to see a resolution in coming months, I would say. One way or another. As you know, we decided to award it to Delek, and then this decision was challenged, and we are not sure if that will be reversed or it will be changed, but hopefully in the coming months we'll see some resolution on that in that respect. And also there's a question for me about exports to LNG. I don't have the information, I apologize. I'm not sure what are the economics that are being discussed between the companies involved, but you know, it will be interesting to see if they can meet an agreement on that and make this thing viable. I think everybody in the region thinks it's a good idea to have the gas coming from Israel to the LNG facilities which are idle, and I hope that can be done. That can be the economics, yeah.
Yeah, I think what we can add here to answer this question is the capacity of the 2 LNG plants is close to 2 billion standard cubic feet a day of capacity. I think there is enough gas already discovered to fill up that capacity. Now, another important consideration is, and probably an answer to this question, is the fact that the domestic needs of Egypt need to be met as well. So the exact amount of export really will depend on the needs of the country as well, and the exact commercial agreements that are going to be put in place. But to put it in another way, it doesn't make a lot of sense to export all of the gas when the country needs it for their domestic market.
Got some context behind those numbers that Andreas mentioned. If you look at where gas demand is today in the region, it's just above, say, 14 BCF per day, which is dominated, of course, by Egypt and Italy in the region for the whole of the 7 countries as we look at those EMGF countries. But where are we expecting that to see that go by 2030? You know, we're seeing something in the range of, like as mentioned, 16 to 18 BCF per day, and by 2040, somewhere between 18 to 20 BCF per day. That growth is largely driven by Egypt, which would double in demand in the next 20 years to around about 12 BCF per day. So that's what Andreas referred to, huge, largely driven by power generation growth. And of course, as Dr. Kadosh mentioned as well, you know, the Israeli gas demand is also going to more than double to over 2.3 BCF per day. But when you contrast that against the supply picture, you know, we see the recent exploration appraisal successes in various waters as having the ability to ramp up regional supply to over, I'd say, 8 BCF per day, from 8 BCF today to around about 13 BCF per day by 2028. So I think a substantial increase. But then thereafter that you see quite a rapid decline out to 2040, back down to about the 8 BCF per day levels. So you know, we calculated that would need about 13 TCF of additional gas over and above what's already out there being appraised and developed to be found and to be brought on stream to arrest that decline. And thereafter, as Andreas said, you've still got that shortfall and that deficit. So I think pulling in Israeli gas or Cypriot gas or wherever else gas that may come in from the region to be monetized to LNG exports is good from a dollar perspective. But of course, you still have to meet the domestic and regional needs. And of course, you know, if you look at Cyprus looking to import LNG, of course, there's also the potential for using domestic Cypriot gas as well by way of swaps or direct monetization to feed into that gas demand in Cyprus.
Okay, so I'm really conscious of the time because we're now running 25 minutes over, but we have, Peter, we now have 2, I think these are really the final questions now, and thank you to Fabrizio and Nalda Kali from, you know, for asking them. Peter, if you, these 2 are up to you. And also from my own side, I'd just be really keen to hear from the panelists, you know, what sort of, how do you see the demand like in the region growing in the short term as the world comes out of post-COVID lockdown? How do you see that demand sort of domestically in the region developing. But I'd like to thank everybody for their questions today. And Peter, the final two are over to you.
Sure. So, I mean, if you'd like to have a go at Nick's question first, and then we'll maybe try and squeeze in the final two from the Q&A, guys. So, Ryan, do you want to have a crack again at Nick's question, and then we'll move on to the other questions?
Yeah, apologies, my connection cut out. Nick, can you just recap the question, please?
Yeah, sure. How do you see demand? How do you see demand in the short term as we come out of this post-COVID, or COVID, continuing COVID world?
I see, like I mentioned, I think that 2020 was very much a blip. You know, we had seen aggressive demand growth in the gas and the LNG industry, figures that any industry around the world will be proud of and really happy with.
Yeah.
And I think that we'll see that rebound quite quickly towards the back end of 2021. So almost you had this dip, but I see it coming up to that same level, and thereafter continued growth going forward. It varies depending on country to country, but typically we're seeing countries with 7 to 10% annual year-on-year demand growth levels. Of course, renewables temper some of that demand, and maybe that will happen in the region, for example, like in Italy, as being one example that's there. So I very much think that demand will bounce back very quickly, and we've already seen this taking place in China, for example.
Thank you.
Okay, let's move on quickly. So just to answer the final question on the Q&A, it's a bit slightly dismissive, but the question is asking if CHC is looking at energy from renewable sources at the moment. CHC stands for Cyprus Hydrocarbons Company, so I don't think that renewable energy falls within CHC's remit, unless I'm wrong, Andreas.
Oh, you are absolutely right, Peter. Now, I guess the question was whether we are looking into it from a country point of view, and I think you answered. The answer is no. However, it happens that we are indeed, as a company, looking into renewable sources for the power production of offshore facilities, and what implications these could have, and what potential benefit this could have. So yes, we're looking into it from an upstream point of view, but I know that the topic is being looked at by the Energy Service of the Ministry of Energy, Commerce and Industry, but also from the local energy regulator, SERA.
Mm-hmm. Okay, thank you, Andreas, for that. And we'll go for the last question from Fabrizio Sanguinetti. He's saying that he believes that the synergy will help Egypt, will help the region become an energy hub. But is there an idea of how much gas will be going to Egypt, and how much of that will be turned into LNG using Idku and Damietta? I think it's a tricky question to answer for the three panelists, but I mean, do we have any kind of estimates or forecasts of how much gas could be headed towards Egypt in the coming years? Again, Ryan, sorry, I'm picking on you today. It's nothing personal. Please don't take it that way. But if you'd like to take the lead on this, and then maybe Andreas and Dr. Gardosh can then come in with their own kind of Israel and Cyprus views on that.
Sure, I think so. With the 12.2 million tons per annum export capacity in Egypt, we equate that, depending on operational requirements, to some 1.6 to 2 BCF per day of applicable export capacity. And of course, you'll all know that much of that has been sitting idle in the last few years, certainly at Damietta, which thankfully has come back on stream recently, and then on Idku. But regarding how much of that gas will actually be imported to be exported, it's all down to the economics, because another questions come in, really speaking, is that break-even gas costs that can feed the terminal then also has to be liquefied, then shipped, and then regassed, and that has to all compete against regional and global price markers. But the biggest strong advantage is that the facilities in Egypt are largely written down and therefore can benefit from quite low, I think, liquefaction tariffs. Numbers are quite commercially sensitive, but suffice to say that, you know, they can even be much lower than the aggressive numbers in the US, for example, of some $2.25 to $3 per MMBTU of liquefaction. And thereafter, you know, you can conceivably get to European markets with around about 50 to 75 cents of shipping, and then adding on about another 75 cents of regas. So all of that has to fit in with the envelope and, you know, European price indicators such as TTF.
Brilliant. Andreas, any take on that?
Yeah, at this point, I would like to put emphasis on the fact that we need to make the market decide where this gas is going to go. And in order for that to happen, really solid steps need to be taken from regulations and gas market functioning point of view in all of the countries, but particularly Egypt, which is the hub or facilitator of the exports, to make this happen. Because if you have the right market framework for these gas flows, then the market will balance automatically the flows. The right amount of gas is going to go to the domestic market, and the right amount of gas is going to go to export, and everybody will benefit. The domestic market of Egypt will benefit because the security of supply will be ensured and protected, and also the upstreamers will benefit because they will have a secure export route for this gas, and kind of being able to optimize at any given point in time where this gas is going to go, depending on where the demand is at that particular point in time.
Okay, Dr.
So
Gardash?
it's a very live and evolving. The supply and demand balance is a very live and evolving matter, and the right framework needs to be in place to enable the gas flows to be flexible.
Correct.
Well, not much to add. Just to mention that the issue of securing supply, domestic supply in Israel is important to us. We've been reviewing that since 2011, I believe, and we're constantly updating our estimations that we want to make sure that there's sufficient quantity of gas available for the domestic market, so we restrict the amount of gas that can be exported. Having said that, we also are not interested to leave gas in the ground. We're very much interested to extract as much gas as possible in this transitional period of the 20 or so years. So there is kind of a two different points of the same question: how much we keep and how much we need to export to allow the development. I can say that we're having our annual review of that issue, and we will probably publish some results of this discussion during the summer, updating our policy on reserves and export quotas. So that will come up soon, hopefully. And as I mentioned, the overall tendency is to allow as much export as possible, although keeping in mind the need to maintain some sort of security of supply for the domestic market.
Excellent, thank you. Nick, would you like to?
Okay. Yeah, I mean, Peter, do you have any final comments?
No, I'd just like to thank the panelists, and it's been a very insightful, informative webinar, and thanks for taking the time out and giving us all that information. It's going to take a while to digest that, I think. But yeah, thank you from me, and thanks to the organisers and yourself, Nick, for hosting.
Thank you, Peter. I'd just like to really reiterate your points there. Thanks to everybody to all our participants, firstly, for making the event happen. We've had a great number of people on board today. Thanks to all of our speakers. Wonderful presentations, really insightful. And as I say, there's a lot of information there to digest. And I know I've learned a lot from today, so it's a really interesting webinar. Thank you, and thanks to you for sharing. So, guys, we will be recording. We will be sending out the link shortly. And if you have any further questions, please do get in touch at emc-cyprus.com, and I'm sure we can try and find some answers to any questions if you so remember them. We have, as I say, we are planning on running. Actually, we are running our physical event in Nicosia in November. So I very much look forward to seeing you all there. And our esteemed panelists, I'd be delighted to ask you all to come and present in person in November. So it'll be a great pleasure to have you there. But thanks to everyone once again. And yep, have a great day, everybody. And as I say, we'll be in touch. Thank you.
All right.
Cheers.
Thank you.
Thank you.
Bye now.
Thanks very much. Stay safe, everybody, and stay well. Thank you.
Absolutely.
Thank you,
You
everyone.
too.
Nice meeting you.